We are very happy to welcome Sven Witherow, Fund Manager of the JPMorgan Global Dividend Fund. One question at the beginning. Last year the dividend stocks lagged behind the broader market. When will the dividend stocks catch up?
Sure. So dividend stocks had a great 2022. They had a tougher time in 2023. But when we look at the long term, I think there are three things that give us cause for optimism. One is the fundamentals. So dividends are growing very healthily globally, and that's helped by the fact that payout ratios are very low post the COVID pandemic. Last year, global earnings fell 2%, global dividends are up 6%. So that gives you a sense of the ongoing momentum. We expect that momentum to persist for several years with about 7% annual growth. Two, valuation starting points are very attractive. We think the category is roughly about 15% mispriced. Part of that is being exacerbated by this sort of Magnificent Seven AI euphoria. And thirdly, the category does pretty well when central banks have typically finished the hiking cycle, looking to start cutting, the economic cycle is getting a bit weaker and people want to get a bit more into more defensive equity assets.
And how does the JPMorgan Global Dividend Fund differ from competing products?
Sure, so in a few ways. First, we invest fully across the yield spectrum, all the way from the fastest dividend growth stocks, a lot of which have some AI tailwinds, all the way up to the more traditional equity income type assets, telcos, banks, etc. Secondly, we invest most of our assets in the middle cohorts of income and growth, these compounder stocks like Coca-Cola or Texas Instruments. These give us the best long-term absolute and risk-adjusted returns. So we have the right philosophy in place, we think, to get a lot of breadth within our dividend picking universe. Secondly, we've got a fantastic research base to work with. 90 analysts worldwide covering 2,500 stocks. We've been doing global stock picking for over 25 years. The combination of those two things allows for very powerful alpha creation.
Last month or last year was a big discussion how artificial intelligence influences asset management. How does artificial intelligence influence your daily life as a fund manager?
Constantly. We have 1,500 people dedicated to creating AI tools to help people at JPMorgan, many of those working in asset management. I'll give you a couple of examples of tools that I use every day. So the first of these is called Analyst Moneyball. This is a bit like the Brad Pitt film, baseball sort of math geeks, and it's very similar. It's about giving us an AI-driven tool to try and help us understand whether our forecasts are too optimistic or too pessimistic, and help us adjust as appropriate. The second one is actually still in development, and I'm working with our data science team on implementing this. This is called Smart Monitor. This is about taking millions of data points and basically helping PMs and investors have a prioritization list of where to focus their attention at the start of the day. This game is about finding the right information and making the right decision. And if we can reduce the amount of time we take to find the right information, we can spend more time on making the right decision.
Last question, but you still need human beings for the asset management.
Of course, this is all about augmenting the human advantage. This is not about replacing our, all those 90 analysts. This is about just making them better and giving us a range of tools to help us take risk better and ultimately deliver better results for clients.
Mr. Witherow, thanks a lot for coming and answering the questions.
Thank you so much for having me.